you ever wondered why some expenses or revenues are split across multiple periods, or how to record costs or revenues that don't fully belong to the current year? So, well, in this video we will explain everything with practical examples, so stick around until the end. Here then are the topics we are going to see today. First, what are accruals and prepayments? Second, the difference between assets and liabilities. Again, the logic behind accruals and prepayments. Some practical examples, common mistakes and tips, and conclusions. So let's start after our intro. So let's start with the correct definition of accruals and prepayments. Accruals, these are portions of expenses or revenues that have been earned or incurred but not yet paid or received. So an example, you earn interest on a loan as of December 31st, but it will be received in January. And prepayment are portions of expenses or revenues already paid or received but related to future periods. For example, you paid an annual insurance premium in November, but part of it applies to the following year. So let's break down the difference between accruals and prepayments as assets and liabilities. First, accrued revenues. These are revenues earned but not yet received. For example, interest income accrued in December but received in January. Into the balance sheet are recorded under current assets. And then accrued expenses. These are expenses incurred but not yet paid. Practical example, a rent payment for December that you will pay in January. Into the balance sheet, they are recorded under current liabilities. And now prepayments, prepaid expenses. There are expenses already paid but relating to future periods. A practical example, an insurance premium paid in November covering January to October of the next year. Into the balance sheet, they are recorded under current assets. And now deferred revenues in the liabilities. These are revenues already received but relating to future periods. A practical example, rent paid by a tenant in advance for January and February. Into the balance sheet, they are recorded under current liabilities. At this point, the question could be, but what is the logic behind this apparent complication? So everything is based on the accrual principle, which is one of the pillars of accounting. This principle requires that costs and revenues be recorded in the period in which they actually accrue, regardless of when they are paid or collected. In this table, I have summarized the two types of accruals and the two types of prepayments with a description, an example, and the correct placement in the balance sheet. So let's start with accrued revenues, which are revenues earned but not yet received. An example is an interest on a loan accrued in December but received in January. And these are recorded under current assets. Next, we have accrued expenses, which are costs incurred but not yet paid. An example could be rent for December that will be paid in January. And these are recorded under current liabilities. Then we have prepaid expenses, which are costs already paid but relating to future periods. An example is an insurance premium paid in November but covering the period from January to October of the following year, and this is recorded under current assets in the balance sheet. And finally, we have deferred revenues, which are revenues already received but relating to future periods. An example is a rent paid in advance by a tenant in December for January and February maybe, and this is recorded under current liabilities. Now, I think it's time to give you some practical examples. To clarify, let's take an example for each type. Example of accrued revenues. A company lends $10,000 at an annual interest rate of 10%. Interest accrues quarterly. As of December 31st, you have accrued $250 in interest income, which will be received in January. And the accounting entry is accrued revenue of $250 under current assets. Now an example of accrued expense. A company received a consultancy service in December in the amount of $500. The invoice for this service will be issued and paid in January of the following year. However, since the service was used in full in December, the cost must be recorded in the current year. So, the accounting entry $500 as accrued expenses among the current liabilities in the balance. Now, an example for prepaid expense. You paid an annual insurance premium of $1,200 in November, and the portion covering January to October of the following year is $10,000 is recorded as a prepaid expense. The accounting entry is prepaid expenses $1,000 under current assets. And finally, an example of deferred revenue. You received $6,000 in December for a service to be delivered over the first 3 months of the following year. So the accounting entry is deferred revenue of $6,000 under current liabilities. Now I think it is important to show you some common mistakes and some tips. Here I prepared a list of the main mistakes that can be made when working on accounting entries on accruals and prepayments. So, common mistakes. First, confusing accruals and prepayments with invoices. Remember that accruals and prepayments are based on the accrual principle, not cash transaction. Second, failing to record them at the end of the period. Omitting accruals and prepayments can lead to an inaccurate representation of the financial position and performance. Third, not updating values in subsequent periods. Always reverse accruals and prepayments at the beginning of the new fiscal year to avoid mistakes. And now some common tips. First, plan the year-end closing carefully. Keep a checklist of recurring expenses and revenues to identify potential accruals and prepayments. Then second, use digital tools or accounting software. Many accounting systems can handle those entries automatically, minimizing the risk of mistakes. And last but not least, consult a professional. If you are unsure about how to record these items, seek advice from your accountant to ensure the correct compliance. So, that is it. Accruals and prepayments are no longer a mystery. I hope this video has helped you better understand how they work and how to record them correctly in the balance sheet. If you found this video useful, give it a like and subscribe to our channel for more content like this. And if you have any questions or suggestions, drop them in the comment down below. So, thank you for watching and see you in the next video.